Morning. How you going?
Mate, good morning. Yeah, another interesting week. Trumpy has got everyone on edge, and who knows what oil's next move is.
Yeah, if you look at oil moves last night, the range and volatility was up there in record territory. I mean, it nearly hit 120 and then fell another 15 before the day was out. So that's pretty wild volatility in the oil market.
Yeah, it certainly is. And you can see obviously other nations starting to get concerned that this thing's going to be a prolonged, drawn out sort of event. And Iran aren't sort of backing down. It doesn't seem like they seem too concerned about Trump's threats any longer. So maybe there's other global superpowers start to assist in trying to get this straight flowing.
Yeah, I think the Europeans came out overnight and said that they're getting ready to do something, but it's probably some sort of escorting through the strait when the time's appropriate. But even they're being very cautious at the moment.
Yeah, definitely.
I'll stick up some
Also,
slides.
being in markets, very cautious markets, I think is a feel.
Yeah, the interesting thing for me, H, is the how orderly the markets have actually been. You know, if you look at the
Yep.
bond markets and even the equity markets, they've whilst there've been some big movements and big volumes, it hasn't really been flat out panic. It's been relatively orderly. Liquidity's held up okay across most markets. I think it was a bit stretched in oil last night, but it's been relatively orderly.
Yeah. Yeah. Very, very true.
I've stuck a chart up here that just shows what happens with markets when oil stays above $100 a barrel. And, you know, it's happened in the past, it happened and will happen again, I'm sure. But you can see markets have held up relatively okay. I think when the oil starts to fall, there's a bit of a hangover with what happens with inflation, depending on how long it stays up. But it also
Yep.
just shows that markets do bounce back after these sort of things. I thought that was a reasonable sort of chart to show what happens when you get oil prolonged over $100. No panic, I think, is the key thing.
Yeah, I think the biggest concern really would just be the lack of supply. It's probably not the oil price as such. It's more that supply issue that countries are obviously getting nervous of fuel stocks running down. I know we've probably got less than 30 days now, probably something in the mid 20s. So that becomes a concerning situation.
Yeah, I think yesterday I sent out a bit of an email to my clients just talking about, well, if that happens and inflation starts to move up and productivity drops, how do you look at your portfolio? So, you know, clearly consumer discretionary start to hurt a little bit, but the consumer staples start to do a little bit better. You'd
Yep.
expect the energy stocks to continue to do pretty well. So I think now's not a bad time, given that there's been quite a bit of damage in some of those oil fields. I think now's not a bad time to start having a look at your broader portfolio and starting to rebalance and tweak a few things. So I've got a few clients starting to do that at the moment, and I think we'll see
Yep.
more of it next week.
Yeah, it sounds like a very good idea.
There's a couple of charts there on copper.
Yeah, I thought the copper price is one we probably should discuss a little bit. It's had a very strong surge sort of over the first 3 months of this year. Um, and demand is expected to stay really firm. I'm certainly hearing that global copper supply is at record lows because there's been probably a lack of investment in copper over the last decade. So that is sort of a bit of a concern with demand for copper from all these new high tech AI and the like requirements for copper within the systems they run. Demand is really going to remain pretty solid. So I sort of thought it was worth bringing that into a discussion about our probably two major resource companies, BHP and Rio. And people may not realise that BHP is now actually more than 50% of BHP's 50% of BHP's earnings is coming from the copper sector.
Wow.
I think most of us really probably would have thought iron ore was the dominant one for BHP, but copper is really is something BHP do still have huge exposure to, and with the push up in the underlying price of copper, then that really will see some strong earnings flow into BHP. We have seen a pretty big price move already for BHP, although it is trading sub $48 today. And I would see that as a pretty good opportunity if you're not long BHP. I think it's can get back into the mid 50s again once we get through this current mess with oil. I think copper demand will sort of remain very firm and probably pick back up towards those higher levels again. And so BHP for me is a buy. And I think Rio, pretty similar vein. It's still a pretty big earner, from the copper sector. So I think either of those two would be stocks I think are a buy right now. A couple of different strategies you could use. We could sell some puts if you want to buy the stock, or buying a call spread might be a good way to get some exposure to upside in the next 2 to 3 months.
Yeah, I think I totally agree. I mean, the chart on the left, there's the Wire ETF, which is a global copper miners one, and you can see it's sort of hitting its 200-day average at the moment, which has shown some support in the past. I'd tend to agree. Those big copper miners, the macro outlook for copper is very, very strong. So if you're a longer term investor, you'd be starting to look for an entry signal for both those two stocks. So yeah, that's a great one.
Yeah, definitely. Yeah, look, I think under 48 BFP starts to look pretty attractive to me. So I'd be keen to see a few clients look at picking up the stock, or taking an option strategy.
Yeah. A couple of trades I did yesterday, actually. So you see the chart on the left, there's Woolworths. It's technically it's way outside its sort of range, and so
Yeah,
technically due for a bit of a pullback. If you look at its price targets on the right there, it's above its average price target. So yesterday we were selling the 37.51 calls for 37 cents a share, which is, on 5,000 shares, that's about $1,600. So it's not a bad sort of trade. Woolworths, it's had an incredibly big bounce, and whether it can keep going or not. I mean, traditionally consumer staples do very well in this sort of environment, but at the same time, you've got to balance out their input costs if oil keeps going up as well. So we had a couple of clients selling calls in Woolworths yesterday. The other chart I put up here was this is yesterday Woodside's chart. You can see it jumped, I think it was 6.5% yesterday, and I think it's
it was
up.
a very big day, wasn't it?
Yeah, and it was up 1% again this morning when I last looked. So it's outside its current targets. I mean, the thing with the targets is these targets haven't been adjusted since we've had this oil shock. So you need to be a little bit cautious using them.
Yeah.
But with Woodside as high as it is, we had a client who had quite a big exposure in the shares, looked to sell covered calls, but rather than selling covered calls over all of them, they sold covered calls over half their exposure. So they can play both sides here. They brought in a bit of income and at the same time hang on to the other 50% of their shares without doing anything, just to watch and see what happens. We might even sell some calls over the remaining part a bit later on. So it's certainly one to watch. It's a little bit volatile, but when it's this high and your premium's so good, I mean, I think the premium they got yesterday was phenomenal for a couple of dollars away from the share price. So it's certainly another one we looked at.
Yeah, I think Woodside definitely writing some calls at these levels. If you look at most of these conflicts, they do blow over. And I mean, I know it all feels very tense at the moment, but in 2 weeks' time, it could be a very different story. And I think, if you did lose Woodside shares anywhere above $36 that you're exercised on a call, I don't think long term you'd be unhappy. I think that'd be a pretty good price to lose the stock at.
Yeah,
So
I
yeah,
tend
come
to,
the go.
tend to agree. So, I mean, there's plenty of trading, even with this sort of volatility and uncertainty out there. There's plenty of ideas and trading and smart things you can do when you've got this sort of environment happening in the background.
Yeah, definitely. Yeah, so it looks like our market's sort of trying to find a little bit of support today. Just we're down a little bit, but we're just sort of hanging in there trying to find a bit of support. So maybe looking for a US bounce tonight with more news out of these other nations that looking to step up a little bit to help out the conflict.
Great. Well, have a great weekend, H, and
You
talk to
too,
you
mate. We'll
next week.
talk next week.
See you later.